Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So, on that note, trigger the trade, my time and price target, October 16th at 85 cents. And in this example, the market, oops, I got my slides a little bit out of order there. I'll have to go back and look at that one a little bit later. Looks like one of my slides is missing. That market did make new lows, and I can show you that chart a little bit later here on the in the actual software itself. But that market did, in fact, make new lows. And let me go back on my chart and actually see when that happened. It actually happened on October 22nd. So did it hit perfectly on October 16th? It didn't, but we were within 3 or 4 days of October 16th. Again, you're going back a month, and we're getting it down to within a few days of where that market will make a new low. If that happens, the trade should be successful, as long as volatility still works in your favor. And I'll share that chart with you here in just a few minutes, and I'll show you the end result of that trade. Here's another example, however. This is the British pound on a 480-minute chart. And again, time frame's irrelevant. You discuss or you find the time frame that you want to trade, and then you trade it. This is a 480-minute chart of the British pound. On September 21st, we've got a Type 1 trade just starting to form. Run down the rules of your trading strategy. We've got a wave 4 present, profit-taking index above 35, it's actually a 47, and we're holding the green channel. The oscillator is fine. I didn't have the oscillator on this chart when I took the snapshot of it. The oscillator was fine. We've got 4 rules. All have been met. The examination process, perfect. We've got a target price of $57.94 around October 11th at 4 p.m. Eastern Time. Find your option strike around October 11th. Now, with Gann, with Elliott, with Fib, we can get pretty precise with our time projections. But again, we're predicting a date 3 or 4 weeks from now. We're getting it down to the hour. It doesn't mean that it's going to hit that necessary hour, but I'd find a strike around that time. Now, the way that we're getting this, the mob price, the area right here, if you look in the center of the mob, and I'm just going to draw a line that extends kind of to the right to where my prices are. That's where I'm getting that $57.94 price from. That's where it's coming in and telling me $57.94. Where I'm getting my time target is you've got these 2 hash marks, these 2 vertical hash marks, here and here. This is a time perspective or a time objective for that price to be hit. Now, what I typically do is I take the second hash mark, which was right here. That was October 11th at 4 p.m. Now, eSignal will allow you to go out into the future and specify where that price actually is on your chart. What time does that occur? So eSignal will let you see that, out into the future. October 11th, $57.94. And this is current. This is from this year. So these are current charts. And the target was hit on October 9th at 12 a.m. So was it hit on October 11th? We were about a day early. But think about that. We're projecting all the way back from September 23rd, 24th, where the market will be on October 9th or October 11th. Within a few days or within a few hours are bars on that chart to give you the precision that you need as an options trader. That's how the mob works with the Type 1 trade. The pattern is set up on the Type 1 trade. The mob gives you time and price from where that trade should end, where we should be taking profits in the market. That's the Type 1 trade. One of our bread and butter strategies for advanced get. Now, the Type 1 trade, the summary, and this is not something you don't need to write down if you're interested in the advanced get package or anything that eSignal Learning offers. We have a very detailed mentoring and foundation program that'll help you and go through step-by-step how to learn these trades, how to learn the mob, how to interpret the results. We have a 3-month curriculum that will help you learn these strategies. And again, these are not strategies that are just brand new in the market. Advanced Get's been out for 21 years. Next year it'll be 22. It's a strategy, it's a theory that's really stood the test of time. The 4 rules of the Type 1 trade: Elliott Wave 4, oscillator pullback, profit-taking index greater than 35. That essentially means 36 and higher, and your Wave 4 channels. You're going to be holding an ellipse. I didn't talk much about the ellipse this afternoon, but that's another optional study that I can show you, at one of our sales presentations or one of our other presentations. We'll teach you about that in our curriculum. We're going to enter the trade at the cross of a regression trend channel. We need to confirm that the pattern will continue. You cannot do that until the market starts to sell off. I'm going to go back to that Swiss franc example in just a second. Okay. Here was the Swiss franc. Now, our pattern is predicting that the market will make new lows. And this kind of gets not so much the option side, but this is a kind of a beef that I have with a lot of the public right now. Markets are at major lows. I don't want to say historic lows because we're nowhere near historic lows. Markets are selling off pretty rapidly. We've had a nice few days since they cut the interest rates, but the market's still in the downtrend. People are saying, is now the right time to get in? It's not the right time to get into the markets unless the market starts moving back higher. And I'm not talking one day of moving higher. I'm talking the down pattern has stopped and the market has started moving up. Don't get into a market before your direction is confirmed. And that's what the regression trend channel does. Even with all of the great tools that we have with Advanced Get, there's still an element or there's still a chance of risk. Just because a pattern has 62% probability of moving lower, there's still that 38% chance that it won't. The only true confirmation that you have as a trader that your pattern has a good chance of working is the market changes direction. This is a Type 1 sell on your screen. Do not trigger that trade until the market starts selling off. And by using the cross of the regression trend channel, which we had right here, I'll even draw a little box around it. This bar right here, until that bar comes in and goes lower than that regression trend channel, that is your confirmation that the pattern is starting. Now you trigger your trade. Triggering is a very important concept. So until that happens, we don't have 100%, dependability. Well, we're never going to have 100% dependability, but we don't have the dependability to short that market.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.